This video is brought to you by Skillshare, an online learning community for creators where millions of people come together to take the next step in their creative journey. Skillshare has thousands of classes with a huge range. Want to learn some illustration skills? Sure, why not? Skillshare's got you covered. Video production? Oh yes. Crafts? Sure thing. Like I said, Skillshare's diverse. Beginner or pro. Skillshare has a class to suit you as long as you're curious and ready to learn. Me, personally, I've taken a couple of courses in the last few months. One was all about productivity, squeezing as much as possible out of each day. We've all got those same 24 hours. I just wanted to use mine better. That one is by a chap called Thomas Frank, who's also a YouTuber, by the way, so super appropriate for me. Then I dove into another course, which sort of expanded on a particular element of productivity, email management. That one's called Email Productivity, Work Smarter with Your Inbox by Alexandra Samuel. I'd recommend checking both of those out. So yes, Skillshare, just go do it. You will like it. Also, 2 months for free. So if you don't, it's no big deal. An annual subscription is less than $10 a month with Skillshare. So support VisualPolitik by supporting Skillshare. That would be wonderful. There is a link below to that 2-month trial. And let's get into it. Imagine a company whose annual turnover surpasses the economies of many entire countries. A company that produces more than 10% of all the oil in the world and controls more oil reserves than any other country except Venezuela. Such a colossus would be the greatest business power of all time, a company that could alter the entire world economy all by itself. That is, a simple board of directors meeting would be more important than virtually any decision of any government. Well, div viewer, that company exists, and it's now gone public. Yes, we're talking about Saudi Aramco. Okay, now you may not have heard of it, but this company controls and manages practically all of the oil fields in Saudi Arabia. This giant is worth almost $2 trillion in the market and can reap profits of more than $100 billion per year. To give you a comparison, that's more than the combined profits of the world's 5 largest private oil companies. It's a massive difference. Check this out. And what's more, Aramco is also one of the largest petrochemical and petroleum refining groups. For example, it controls refineries throughout the world, including the largest refinery in the United States. Basically, in terms of fueling a car, this company's decisions are going to matter almost as much or even more than your own government's decisions. So what exactly lies behind this company? Why has Saudi Arabia put its crown jewel on the market? And exactly how far can this giant reach?
Going on the market.
On December the 11th, 2019, shares for Saudi Aramco Oil Company began trading on the Tadawul, Saudi Arabia's stock exchange. The Saudi government barely sold 1.5% of the shares, but that was still enough to make it the largest public offering of all time. They sold shares worth $25.6 billion. This money will nurture the Public Investment Fund's coffers, a fund that aims to invest in companies and sectors beyond oil. Because, well, that's the goal. You see, almost all the countries in the Persian Gulf, which basically only produce oil and gas, are going crazy trying to diversify their economies so they won't be so dependent on these raw materials. But not everyone is in the same position. For some countries, like Kuwait, Qatar, or the United Arab Emirates, this isn't an urgent matter. After all, as we told you before on this channel, they have huge resources, huge reserves of money, and very small populations. For example, in this video, we told you how Abu Dhabi's savings surpass $1.5 trillion. However, Saudi Arabia's situation is very different. The country of the House of Saud does indeed have vast oil reserves, the second largest in the world after Venezuela, but the problem is that its population is nothing like that of Kuwait or the Emirates. That is, in per capita terms, their resources are much, much smaller. And not only that, Saudi Arabia is a very young country with high population growth rates. We're talking about a country where 40% of the population is under 25 years old. And yes, historically, oil has allowed them to finance practically everything: large urban projects, free education and healthcare, public jobs, guaranteed income program, etc. However, with a significant portion of the population aging, the situation is becoming increasingly complicated, and the fact is that the government has a huge glitch in its public accounts, a deficit of almost $50 billion per year. And this figure of $50 billion was only achieved after applying several cuts, new taxes, and after the price of oil recovered. And still, it's $50 billion per year. And that's precisely where one of the great protagonists of this story comes into play: the Crown Prince Mohammed bin Salman, of whom we've already talked about here on VisualPolitik, and who today runs the country. You see, in January 2016, Mohammed bin Salman announced his intention to put 5% of Aramco on the open market to finance his Vision 2030 plan, a plan that was born with one goal: to reduce the country's huge dependence on oil. Because almost 70% of all of the Saudi government's income and 80% of its exports depend on this raw material. What's more, in Saudi Arabia, non-oil activity depends largely on public spending, which in turn depends on oil. In other words, it's very hard to find a sector of the economy that doesn't, in one way or another, depend on hydrocarbons. We're talking about an economy that's just addicted to black gold. And of course, in a landscape with more and more producers, where fracking has become a powerful rival and where concerns for the environment and global warming could curb oil consumption, this dependence is a problem. But if we also consider that the young Saudi population expects a certain way of life, the country clearly needs to seek alternatives. And that was precisely the intention: to gradually sell its stakes in Aramco to obtain money with which to finance other projects, to create new jobs and reduce the country's dependence on oil. But as we often say, the road to ruin is paved with good intentions. So here's a question: do you think that releasing this giant into the stock market was a success? Well, you could easily draw that conclusion. After all, the Saudi government got more than $25 billion. But if you think that, you're actually very wrong. In spite of the huge headlines that we may have read in the media, the truth is that Aramco's IPO wasn't easy and it wasn't successful. Let's take a look at that.
The largest company in the world.
By listing on the stock market, Aramco has become the wealthiest listed company in the world. In fact, within a few days of trading, its market value surpassed $2 trillion.
Aramco valuation hits Crown Prince's coveted $2 trillion target. Wall Street Journal.
But just a second, because the background to this story is very, very different. You see, when Mohammed bin Salman announced his plans, he wanted to list Aramco in one of the great world markets, such as New York, London, or even Hong Kong. That is, within reach of practically every investor in the world. And not only that, he intended to sell 5% of the company in order to raise at least $100 billion. But in the end, that entire project ended with the sale of just 1.5% of the shares, and only on the Saudi Arabia Stock Exchange market, which financially is fairly insignificant. So the question that now crops up is, well, what on earth happened to cause such a change? Well, the truth is that going into one of the big markets involved two major problems. On the one hand, these markets demand high levels of transparency and compliance with many regulations, for example, the protection of small investors. And that, for one of the murkiest companies in the world, which has been cashing blank checks for the Saudi royal family for years, well, just wouldn't work. The prospect of transparency for a government that's used to doing what it wants, when it wants, and how much it wants was just too much. On the other hand, there was a much bigger problem which they couldn't escape. The Saudi government was forced to face a harsh reality. The market wasn't willing to pay what the Saudi government requested for Aramco. Yes, it may be the world's largest oil company and have the lowest extraction costs, but it's still a company controlled by one of the most authoritarian and strictest regimes in the world.
Aramco should trade at a discount rather than a premium to international oil majors. We rate Saudi Aramco as underperform. Analysts at Bernstein to the Financial Times.
And don't forget that we're talking about the Middle East, one of the most volatile regions on the planet, where it isn't strange to see things like this.
May 2019. Saudi Arabia oil pipeline damaged in drone attack by Houthi rebels. Armed drones force shutdown of pipeline. Incident follows attack on 2 of the country's oil tankers. Wall Street Journal.
Not to mention the dire situation of the country's public accounts. Because whatever happens, the truth is that Saudi Aramco will continue to finance the Saudi government, not just with dividends, but also by paying lots of taxes. No less than 20% of its income and 50% on benefits. But even with those payments, the numbers just don't add up. Neither above nor below, not one way or another. They simply just don't add up. And with the shortfall of $50 billion in the public accounts, how do we know that the Saudi government won't repeat what they did in the past? That is, just keep draining it dry.
If oil prices are lower, you could expect that the state would potentially increase taxes. The promise to maintain high dividends to non-state shareholders, he points out, would not be legally sacrosanct. Dmitry Manenchenko, senior director at Fitch Ratings.
Well, it's all these factors that made international investors offer much less money than the Saudi government expected to get. And that happened despite the company promising to distribute at least $75 billion per year in dividends. So it was those low ratings that forced them to play at home. And you know what? Its placement in the market is just a good example of how things work in these countries, and that's that they work badly. The sales operation had more doping than the Tour de France. For example, the government recommended that big businessmen start buying shares or, well, suffer the consequences. They pressured allies such as the Emirates and Kuwait to buy billions of dollars in shares. Banks had to give loans with extremely low interest rates so small investors could also buy shares, and a huge advertising and telemarketing campaign was launched. That is, the government did everything it could to make the operation a success, or at least to be able to say that it was. Because in the end, most shares stayed at home. That is, the Saudi economy remains as dependent on oil as it was before. And even more so now, because it isn't just the government, but also many families' heritages that are linked to oil.
They aren't doing what they were aiming to do, which is bring in foreign capital. It's not a real deal, it's political. A senior banker who asked not to be identified to the Financial Times.
The question we need to ask is, are we looking at a downfall in Mohammed bin Salman's plans? Well, in any case, what's clear is that this attempted global sale has highlighted how things actually work in Saudi Arabia. Saudi Arabia is just one of those countries where the government says something and, well, that's what is done. And that's a bad mix, at least if you're hoping to receive foreign investment. In short, this is the story of how the Saudi Arabian government decided to begin privatizing its most valuable assets. Will it achieve its objectives and decrease its dependence on oil? Would you be willing to invest your money in a company like Aramco? Well, leave your answer in the comments below, and I really hope you enjoyed this video. Please do hit that like button if you did, and don't forget to subscribe if you would like new videos from us. Also, please do check out our friends at the Reconsider Media podcast who provided the vocals in this episode that were not mine. Also, this channel is possible because of Patreon and our patrons on that platform. Please do consider joining them and supporting our mission of providing independent political coverage. And as always, I'll see you in the next video.
And if you want to learn more about politics and hear even more of my lovely voice, you can join us at Reconsider Media. We have a podcast at reconsidermedia.com/podcast. See you there.